This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC on Wednesday cut its 2022 forecast for growth in world oil demand for a fourth time since April and also trimmed next year's figure, citing slowing economies, the resurgence of China's COVID-19 containment measures and high inflation. Oil demand will increase by 2.64 million barrels per day, BPD, or 2.7% in 2022, OPEC said in a monthly report, down 460,000 barrels of oil per day from the previous forecast. The world economy has entered into a time of heightened uncertainty and rising challenges, amid ongoing high inflation levels, monetary tightening by major central banks, high sovereign debt levels in many regions as well as ongoing supply issues, OPEC said in the report.
The question of how, when and whether to cap gas prices loomed over another meeting of European Union countries on Wednesday, as they pursue a joint plan to target high gas prices, a compromise that has eluded them for weeks. The 27-country EU is plotting its next move to tame soaring energy prices and shield consumers from surging bills, as Europe heads into a winter of scarce Russian gas, a cost-of-living crisis and the looming threat of recession. EU energy ministers meeting in Prague will attempt to provide clearer instructions on what the European Commission should propose as the bloc's next emergency energy measure.
Moving on to the top news in the energy sector.
Russia's president said Europe was to blame for its energy crisis with policies that starved the industry of investment as EU states struggled on Wednesday to agree on a gas price cap to offset its impact on consumers. Worries about the security of energy supplies were heightened when a leak in Poland on the Druzhba pipeline from Russia reduced the flow of oil to Germany. Poland said the leak was probably caused by an accident, but it came as European Union nations are seeking to wean themselves off a reliance on Russian energy in response to the invasion of Ukraine in February.
Oil futures fell for a third day on Wednesday, as a stronger dollar and worries about weaker demand and rising interest rates outweighed supply concerns that followed last week's OPEC Plus cut to its production target. Both OPEC and the U.S. Energy Department slashed the demand outlooks. Last week, together with allies including Russia, OPEC sent prices rising when it agreed to cut supply by 2 million barrels per day, BPD. OPEC on Wednesday cut its outlook for demand growth this year by between 460,000 barrels of oil per day and 2.64 million barrels of oil per day, citing the resurgence of China's COVID-19 containment measures and high inflation.
Next, we have the top news in metal markets.
The Biden administration is considering a complete ban on Russian aluminum in response to Russia's military escalation in Ukraine, Bloomberg reported on Wednesday. The White House is weighing an outright ban, raising tariffs to levels so punitive they would impose an effective ban, or sanctioning United County Rusal International PJSC, the company that produces Russia's metal, Bloomberg said, citing unnamed people familiar with the decision-making. The Bloomberg report said the White House had held off sanctioning Russian aluminum at the start of the invasion out of fear it could disrupt global suppliers.
Iron ore futures slumped on Wednesday, with the Dalian benchmark contract hitting its lowest in 2 weeks, as intensified COVID-19 curbs in China and signals that its draconian zero-case approach will continue weighed on sentiment. Shanghai and other big Chinese cities have ramped up testing for COVID-19 as infections rose following this month's Golden Week holidays and ahead of the crucial Communist Party Congress beginning October 16. Speculations that top steel producer China would relax its zero-COVID policy after the Congress had recently helped push iron ore and steel prices higher. We will now look at the top news in the agricultural sector. Farm Office France Agri on Wednesday raised its forecast for French soft wheat exports outside the European Union, now seen 15% above last season, but said sales would depend on whether a Ukrainian grain export corridor was extended. Soft wheat shipments outside the 27-member bloc are now seen at 10.1 million tons, up from 10.0 million in July, France Agri said in a cereal supply and demand outlook. France, the EU's biggest wheat producer, recorded a small drop in output this year after drought but benefited from hefty demand over the summer as war in Ukraine disrupted Black Sea exports. Chapter.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.